Before we get into today's episode, I just want to remind everyone SBA Today is now available on podcast streaming services. Catch up on all the latest news in the world of SBA with our beloved co-hosts Tanya Mazurik and Paul Long. I love the show because I always learn a valuable lesson listening to their real life stories, and the way they deliver it and tie it back to what we do makes the show really entertaining and really fun to watch. Critics are calling it Regis and Kelly meets SBA Connect. Check it out today, and don't forget to subscribe to SBA Today. The secondary market. That's the topic for today. And who better to have joining us than Karen Bean, an industry veteran and former chair of the Secondary Market Committee at Nagel. She joins us to dive into the history of the secondary market and how it all works. And she takes us behind the curtain, and I have to tell you, it was eye-opening. Also, after over 20 years at Signature Bank, Karen left. Now, if you watch the news, you know what happened. Signature Bank was shut down, and then it was bought, and then she was shut down again. So Karen tells that story and shares with us her newest venture. So stick around. I hope you enjoy this brand new episode of The Art of SBA Lending. In 2020, the banking industry was forced to accelerate into the future, and now there's more innovation than ever before. And many of my colleagues are embracing these tools, and they're winning. But the banks that are slow to adapt, well, frankly, I'm concerned. Here's an example. Bank A uses Lumos and has over 1 billion data points at their fingertips that allow them to, within seconds, access all this data. Local economic data, industry insights, even a predicted expected loss. And Bank B, well, their underwriter spends hours Googling it. Which bank do you think is going to be winning 5 years from now? Guys, we can finally make credit decisions using actual data. Let Lumos take your small business lending to the next level with cutting-edge analytics by going to lumosdata.com and scheduling your demo today.
All right, Karen Bean, thank you for joining us at the podcast. Long time no see.
Good to be seen.
Yesterday at the airport in Fort Lauderdale.
Yeah.
I saw you there, flagged you down, and we sat next to each other on the plane, which was delightful.
Yeah, it was fun. I flew in from Key West versus Houston, so wasn't really expecting to see anybody in the airport. So
now, what SBA conference is down in Key West?
Oh, you don't go to that one?
Kegel?
Yeah. Yeah, it's off and on conference.
Well, I obviously have seen you around. You've been in the industry for a few years now, and but we never really got a chance to sit down and talk. So yesterday, on the airplane, watching the sunset over the United States.
It was really beautiful. It was nice.
It was a lovely evening. I'll remember it and cherish that memory forever. All right, let's get into it, because I've been meaning to have an episode of sort of the secondary market. We have yet to do one, and it's such an important part of our industry. It's kind of like the foundation in a way of the SBA industry, and who better to have on than you? So
thank you. I appreciate you asking me.
So just give me the history. How did you make your way into the SBA industry? Did you start as a secondary market buyer? Just give me the whole background on yourself.
Well, I'm going to date myself by telling you how I got started in this business, because I answered an ad in the newspaper. Wasn't quite sure what the job was, but I already had some of the licensing. So I was working for a different financial firm, selling insurance and working with individuals, and I really didn't like it. So I saw this ad for SBA institutional sales. Again, didn't really know what it was, but went in, and apparently the interviews went well enough that they gave me a shot at it. And I remember sitting down on my first day, and my boss at the time handed me this red book, and she said, "Here." And I'm like, "What's that?" She goes, "It's a bank book." And I said, "What am I supposed to do with it?" And she said, "You just open it up and you start calling people." I said, "Well, who am I supposed to call?" She said, "Why don't you just start with the president and work your way down?"
President of the bank.
I said, "I can't do that," but I learned pretty quickly that I could. So
I was straight up cold calling.
yeah. So
lot
that
of
is,
BDOs that listen to this can certainly, that will resonate
Yeah.
with them.
we all had to do it at some point. So
Yeah, it definitely toughens the skin.
yes,
That's
yes.
great. So you went from basically like kind of B2C to B2B in a way, selling, and started selling to institutions, but before you were doing life or insurances to like individuals?
To individuals, yes.
Is that a big difference, like switching?
It's a very big difference. Yes.
In what way?
Institutional business, it's a whole different caliber of person in the sense that, they already know how business works. I mean, they're anticipating they're going to get calls for investment products. So, versus individuals who, are not necessarily familiar with anything, and you're trying to just explain, insurance versus different investments. So, the institutional piece is very different. I would say a much easier cold call, in a sense.
So you just pick up the phone, and when was this, by the way? Like, did they? I want to ask because did they have like receptionists? Like, are you calling the receptionist?
The gatekeeper,
Yeah, exactly.
The gatekeeper, we call them. So, yeah, some of them did, because you were typically, if you were just making a generic call into the bank, you're going to get, some type of, operator or receptionist. So, sometimes they would put your call through, and sometimes they wouldn't.
Interesting. And so, you as a new person in that industry that you're learning about the product, you have to get these people not only call you back, but then you got to sound like you know what you're doing on the phone. But when you haven't done a deal yet, that's hard. Like, how did you make that work?
It's almost like doing this. You just sit and you just have a conversation. I learned really quickly, it's a simple question just to ask, do you originate SBA loans? And if they say yes, do you sell them? So it's a couple of quick questions, right off the bat. And then you just start having a conversation. One thing I've learned over the years is you don't have to know everything. You just need to go find out. Come back and give them the answer. So I think being very authentic and talking with them, the business built pretty quickly. I
mean, also it seems like a pretty, I don't want to downplay it, but a pretty easy sell. You're saying, hey, like I guess it's an easy sell to sell the idea of, hey, this is a 75% guarantee that you can sell in the secondary market, get liquidity, earn premiums. The return on equity is like second to none. That part is like, yeah, sign me up.
That's the easier part of it, obviously, is buying loans from originating lenders. And yes, liquidity, especially now, it's a pretty big deal in the banking world. So high premiums, liquidity, it's pretty easy to get their attention if they haven't sold before. But once we buy all those loans in, typically we package them up, create SBA pools, and now you're talking to a whole different type of institution when you're trying to sell the product versus buying it in. So you have to look at both sides.
That's crazy. Let me just ask you now before I forget, but do you buy them and then you actually have them on your balance sheet and then you sell them? So are they like on your balance sheet for like a number of days before that's sold?
Different institutions do it differently. When I was with Signature, we were a bank, and so we put them on the bank balance sheet. Some of the institutions that are, they're not banks, will end up having a custodian hold them.
Okay. You know how people say like, oh, I make money on the buy or I make money on the sale? Is it kind of like that with this type of business?
Yes, I make money on both.
I love it. Was that company that you answered the ad for, was that Signature?
Yes, it was.
You're kidding?
Yep, in 2003.
And you were there for how many years?
Until March of last year, when we were all pretty shocked when Signature Bank was closed.
By the way, that's the other question here on my list. What happened with Signature? So for those who may not know, what happened?
I would think most people know if they have a television or read the news on their phone, but really we were very blindsided by it. But with what happened with Silicon Valley, Signature kind of fell prey to some of that.
That was like the second one in the news mentioned, right?
Yeah, it was the second bank that was closed.
Crazy.
There's a lot more to it than I think what we all see on the news, but
sure.
In essence, there was similar to what happened in Silicon Valley, and there was a large run on deposits. To my understanding, Signature was still solvent, and I don't think it really needed to be closed, but that, that part's way out of my hands. It happened, and
Crazy.
We had to deal with it. So we were acquired very quickly by NYCB/Flagstar Bank. So we kind of just picked right back up where we left off for about 8 months, and then Flagstar Bank came in and closed down the entire secondary market division of the bank.
Wow.
So twice in 1 year. It was a very interesting year.
That is crazy. Wow. And you were in our business, being somewhere for that many years is like unheard of.
It was a shock. I mean, it was different. I just assumed that I started my career at Signature, and I had every intention of it ending there as well.
Why is that? I mean, why? Because everyone else likes to jump around and move place to place. Like, what kept you in one place for so long?
The lady that started our group, she laid such a great foundation. It was just a very well-oiled machine. We had all worked together for many, many years. I would say we were one of the best in the business, and we were rocking and rolling. There was really no reason to go anywhere else. It was a great situation. It was a great run. I can't imagine doing anything else. I loved every minute of it.
Well, you started at the bottom and you went all the way to the top. You're like the GOAT of secondary market, greatest of all time. As you look back on that run, like, what were some of the highlights to you in your career that stick out to you?
I think the number one thing of all of it are the relationships that have been built over the years. So even though, we're clients, the banks, the lenders are clients, the investors are clients, you just really form almost a partnership over that many years. A lot of trust. And as my business started to grow, I would get so many calls, and even about loans that I didn't buy, that maybe they had sold to somebody else. But they would always tell me, I trust you. Can you help me? And I just always helped them. It didn't matter whether it was, my deal or not. And I think that's probably the number one thing, or just the relationships that have been built over the years. I was incredibly excited and proud when Nagel reached out and asked me to co-chair the Secondary Market Committee. So I did that actually for the last 3 years.
You served on the Secondary Market Committee. What was that like?
Yeah, so I was the co-chair. I took over in 2020. Interesting year, if anybody remembers. It was also when we were doing the transition from the fiscal transfer agent from Colson to Guidehouse.
Oh, right.
So there were some significant bumps in the road. It was an interesting time to take over, but we got through it. We've got some proposed changes we want to try to make to the subsidy recoupment fee. We've got that in front of SBA. Whether it happens, I don't know, but I was pretty proud that we were able to all come together and agree on something, and hopefully impact some positive changes that would actually help.
What is that again? Subsidy recoupment fee?
The prepayment penalty.
Oh, so starting the prepayment penalty on construction deals, starting it after you finish the construction.
Right. We propose, I won't get into the details of it, but the proposal, in a nutshell, is to have an additional 531 prepayment penalty start at final disbursement.
Seems like common sense to me.
So
SBA, go ahead and stamp that.
It's no secret that most entrepreneurs are busy, and getting them to focus on their underwriting checklist is a full-time job. So when it comes to the business plan, projections, and assumptions, I'm a huge proponent of bringing in an expert. Rapid Business Plans is a trusted partner to small business lenders and their borrowers. They make it easy for entrepreneurs to tell their story in a format bankers love. Their team goes the extra mile to ensure everything is done fast and done right. And they're all based here in the US with employees across 4 different time zones. They just completed an export business plan for one of my borrowers, and they were super happy. We got their CRE expansion loan approved, and now they can move forward in their business with a clear plan. Rapid also offers feasibility studies, which I highly recommend for any independent startup loan. So go to rapidbusinessplans.com for more information and set up your Get Acquainted call today. I'll leave a link in the show notes below.
That's awesome. So, I mean, you think about it. You started with a red book at a desk with a phone with nothing, and you built all of these meaningful relationships, had success along the way, end up chairing, the secondary market committee at our trade organization. Like, when you look back on all that, how do you feel?
It feels good. I mean, it feels really good. I'm very proud of what I've been able to accomplish in this industry. Like I said, it's been a good run. Everybody's been good to me. I've had a lot of help along the way. It's not just me. I had a great leader when I very first started in this business that taught me so much. I will tell you the conference circuit was huge for me. I met so many people at one time. And back in those days, I could actually still golf. I made a lot of deals on the golf course.
Really?
So, yeah, those days are over. I don't play much anymore. But
No, I'm terrible at golf.
yeah, so it's a collective effort. I've had a lot of help along the way, but I'm proud of what I've accomplished. And again, number one, I think, are the relationships and the thank yous that I get. And I saw that so much this past year with just the turmoil that happened with us getting shut down. I have clients calling and just said, please tell us, where you end up. We're waiting. We'll be right back.
That's such a great vote of confidence. That is the business we're in. It's like people are just doing business with people. The company can change. You can change the name. You can switch companies. But it's like the relationships override everything.
I can tell you that during my 3.5-month hiatus, my phone never stopped ringing with lenders asking me questions. So
incredible.
I was not on anyone's payroll then, but I still helped them out.
100%. You said you had a mentor that helped you early on?
I did.
Who was that?
Mary Mims.
Mary Mims.
Yep.
And what did she teach you?
She taught me the ropes. I mean, she taught me the business. She was one of the pioneers in this industry. I think she came in the early 90s. I think
that was a fun time.
Yeah, I think this all started in the early 80s.
The secondary market, you mean?
Yes. Yeah, I think it started in the early 80s. And Mary used to run the group at Bank United. And then...
Which Bank United? Wasn't there two? Is there like one in Texas and one?
Thank you, the one in Texas.
Okay. It's I'm from Florida, so I just want to clarify.
Not that one.
So what is the history of the secondary market? I know we talked about this the other day and like we weren't there for it, but like from what you know, like how did that all come about?
I don't have a lot of information from the early days. Like I said, I started in 2003. I think it started in the early 80s. There were a couple of pioneers as well that kind of modeled this after the mortgage market and how the secondary mortgage market works, and just built over time. I don't have a lot of information of when it first started. I know that, again, when Mary came in the early 90s, I know she had some pretty good input to everything was physical delivery back then, and I know she had some input to get at least SBA pools to settle through DTC. It was a big deal at the time, before my time. But
and then did they deliver the check in person too?
Probably, I don't know.
That's crazy.
Yeah,
so the secondary market's been around, several decades, and SBA lending got, I've been calling the 90s like the renaissance of SBA, and the 2000s like the glory days almost, or the golden era. I'm just trying to still figure it all out with the decades. But anyway, I'm sure it was booming and just going nuts, and everyone was, making money and pumping in liquidity, and, banks are happy, everything's good. And then 08 happens. And then from what I understand, the secondary market, just some players got knocked out, and some premiums went like way down. Like what was going on around that time?
So the premium market took a huge hit in 2008. Part what happened is there were a handful of banks, no matter what was going on, they still needed to sell. They had to sell, especially the non-bank lenders. I mean, they had to sell. They needed that liquidity regardless of what the premiums were. But you also had some brokers that, the inventories were just too heavy and you couldn't add to it. So honestly, in 2008, 2009 was one of my best years. We were able to just continue to buy, and there were other brokers buying. I don't want to think that they weren't, but we were one of the few. And so even though premiums were, 101s, 102, maybe 103, there's still some that had to sell. And so
101.
we were able to add a lot of product at those levels.
That's crazy. That's like barely anything.
Yeah.
A lot of people exited the business of SBA lending at that time. A lot of BDOs left because if you're compensated on how much revenue the bank's making on the sale model, 101, I mean, you're pretty much not getting anything.
Well, I think the more important lesson from that, from the secondary market point of view, is how valuable it is and how the community banks need this program. They need to sell those loans. They take that money to make more loans. It keeps that community banker actively lending. So, and that liquidity that banks need, we're there to provide that.
So if for some reason, let's say the secondary market got banned, what do you think would happen to SBA lending in the community bank kind of arena?
I personally think a lot of community banks would exit the program. I don't think they would continue. I don't think they would be able to. The staff that they have to pay, I mean, it's a specialty. It's a very niche business, as we all know. I just don't think they would have the bandwidth, to continue. I'm sure some would, and maybe some of the larger banks could, but I think you would see a lot of smaller community banks exit the program.
The secondary market's almost like helping level the playing field for the smaller institutions who can get into SBA lending and compete against some of the bigger banks.
I think so, yes.
And that's a great thing for small business.
Yep.
So yeah, I mean, if the secondary market's coming in the late 80s and really heating up in the 90s, that's when SBA, I feel like, really started to take off. That's when the money store came out and had 100 BDOs and started just going bonkers. And so it seems like the secondary market played a big part in SBA getting to this level because it just the timeline seems to line up.
I think you're right. I mean, again, some of that was before my time. But yeah, I think it played a very big role in that.
Let's talk about the kind of how it all works a little bit. So really want to break it down for especially the newer people that watch the show who just maybe don't understand. Even myself, I'm a BDO. I guess I'm not a BDO anymore. I'm always, I guess, a BDO at heart. So I'm on the front end, we'll say. So I've never been like, hey, Karen, I need to sell these loans, So I know how much premium is super important, right? Because that kind of when a bank is basically budgeting out their year and their financials, it's based on how much premium they're earning on their loans. What are the factors that determine how much premium they can earn, or what factors impact the premium levels?
Well, there's a couple things to consider with that. And first of all, from a secondary market point of view, we absolutely understand that, it's not all just about how do I get the most premium. You've got to do what's best for that borrower. And if you have to structure a loan that may not, bring as much premium, because that's the best thing for the borrower, there's a home for that too. So, we understand that, that borrower comes first. What we try to do is explain and educate. The majority of the loans that are purchased go into SBA pools, and that's how you're going to maximize the premium. So there's parameters that are set up by the SBA and certain types of loans that you can put into pools based on different factors, the rate, adjust, maturity, loan size, things like that fit together. So that's where the majority of the loans go. There were over 15,000 loans pooled in FY23.
Oh, I didn't know that. And that's out of probably 50,000 total units. So Does that mean about a third of the SBA loans were sold, essentially?
It's typically about 30% of the market is what gets sold into the secondary market. You have some of the larger banks that do a lot of loans that don't sell.
Right.
So it's typically, I don't have exact numbers, but it's usually been about 30% of what's originated gets sold.
Okay, yeah, because TD Bank, I don't know if they sell.
No.
Okay, when they do a lot of units, and Huntington does a lot of units too. Do you know if they sell?
They sell.
Okay. Yeah, they do 4,000 units or something crazy. So term, rate, obviously, the adjustment period, can it fit in the pool? Those are the factors. So, okay. So why did the premium shoot up in 2021 timeframe? There were loans we were selling beyond 20% on some of these 25-year loans.
We saw loans trading at 122. I mean, some even a little bit higher. The demand, a lot of it had to do with the 11-12 CARES Act payments. So you weren't getting any yields off Treasury product at that time. So the investor demand was through the roof because prepay speeds were basically, they weren't zero, but historically lower than they've ever been. And so the investor demand, they brought back the TALF program. There was just, you couldn't keep as fast as we would buy those loans and make a pool. It was gone. They were out the door as fast as they came in.
That's crazy.
Supply and demand.
So it all has to do with prepay?
Well, when the prepayment speeds are incredibly low, they're going to get a lot bigger return on their investment. Plus, it's full faith and credit, and when they were guaranteed, I think 6 months or 9 months.
The payments,
so they knew those payments were going to come in.
Right. Wow.
So the demand was through the roof.
Well, then, they started coming, it seemed like a pretty steep fall from that point, I think. And I don't remember when it was. I think it was 2022, 2023 is when the premiums, the back half of 22, right? And they, all of a sudden, I'm like seeing like 106 on something. And like, why did that all happen?
Well, I mean, there's several factors going on, but first of all, you have to look at the market where premiums should have never been north of 120 to begin with. So when you look at prices starting to drop, and especially when we got back down to maybe like 115, 116 handles, some reactions were, the market's dropped, 6 points. But it should have never, it was so overinflated.
It was just normalizing.
It should have never been there. Yes, it was normalizing. So some of the other drops down to a 106, I think a lot of that, you'd have to look at particular loans because the only rule, the day Signature Bank was closed, the market dropped 4 points in a day.
Really?
That was painful, but it rallied back fairly quickly.
The market dropped just because Signature Bank closed?
It was a reaction to a pretty large investor in the market going away. It was a reaction just to the volatility of what was happening in the banking world.
Founded or unfounded, though, that it dropped because of that?
I think it's hard to say whether it's founded or unfounded. I think it's just a typical market reaction. When you have, even though the SBA secondary market's a smaller market, when you have a pretty significant player taken out, it's a natural reaction that prices are going to drop.
Crazy market it's been all around. I remember it was around the time rates were moving up, and I was thinking that if rates are moving up, people are going to want to pay down their loans faster because now they're paying more in their debt. Is that tying to it at all?
It does, because typically when you start to see rates increase, even though the end investor can get a little bit more return, you tend to see prepayment speeds go up. And so when prepayment speeds go up, prices typically come down.
Fascinating. So to me, I feel like a normal, I feel like we're in a pretty normal situation right now. Do you think like this like what today's sort of state of the premiums are? Do you think this is kind of like normal?
I think we're in a pretty stabilized situation right now from a price perspective. A little bit different what we're seeing in the market is it's a lot of 10-year paper. We're not seeing a lot of 25-year loans out there like we used to. A lot of the investors on our side don't want to go out that long anyway. While the yield curve has been inverted, 10-year paper has become a more attractive investment on the SBA side as well. But it's interesting because there's just not a lot. We just don't see.
That's crazy.
A lot of real estate.
We're not seeing it as
out there
much
right now.
We'd love to see some more. Maybe this year. Maybe it'll come back a little bit.
Hopefully.
Is the average life of an SBA loan still like 7 years for the real estate loans?
On the real estate deals, around 7 years. On 10-year deals, it's 3 to 5.
Really, that quick? So how do you explain this whole new phenomenon of like these banks that are doing the small loans and selling a bunch of those into the secondary market are getting like higher coupons. Is that what we call them?
Yes.
Higher coupons than the larger. It's almost like a $1 million loan is like normal, but then the stuff that's like, a pool of like $150,000 loans is like trading almost even higher and a $5 million loan is like trading lower. Like, how do you explain all that?
Some of it has to do with how we're creating pools. So if you happen to see a large list of loans, even though they may be 150,000 in balance, if they have enough like characteristics to pool, you'll tend to see somebody come in and try to buy that whole package. Mm-hmm. And so that becomes competitive, and you'll see the prices sometimes push up from that. Mm-hmm. With the real estate deals, there's just really, you don't see large packages of those loans anymore. So typically, historically, the real estate deals would trade much higher than the 10-year. But like I said, the investors are they don't want to go out on the long bond, they want to stay short.
Interesting.
And so you're seeing more demand there. It becomes a little cumbersome from the broker-dealer side because it takes a lot of resources to settle those loans. We're still in a manual settlement. Mm-hmm. So it's a little quicker now that most things are digital, but it takes a lot of time. So if you buy 300 loans, you've got to go through those one at a time.
Yeah, pull an all-nighter. But I am really interested in knowing how it works. So like you were just telling me, it's like how it's sold to the investor. Like I'm going to really need you to dumb this down for me and break it down. Like, how does it work? Once I close a loan and it's fully funded and I call you, what happens next? What are those next steps?
So once that loan is funded and it has to be fully dispersed before it can be sold. So that originating lender will typically send out to a handful of brokers. It's usually just on an Excel spreadsheet is how we get most of the information. We place our bid on it and send it back to that lender. They award the highest bid and let us know that we won. And at that point, we typically ask, we'll confirm the bid and we'll ask them for what we call the cover bid, which is the second highest bid. This is, kind of a manual process, like I said. So that's really the only market visibility we have to track pricing. So it's very important that lender not only tell us what the winning bid is, but what the cover bid is.
Interesting.
And then from that point, there's required documentation that they have to send in to the winning broker. They send it to that broker. We go through, analyze, make sure, review everything, that everything's correct. It then goes to the fiscal transfer agent. They give the final approval. If the loan's ready to be sold, we go back, confirm that with the originating lender, and then set up settlement date.
Go back to the cover thing. This is interesting. So you mentioned something in our pre-call called like cover and color.
Right. So we'll ask, when we reach back out, we'll ask the lender, can you provide the color? And what that means is, can you please send us what the winning bid was and the cover bid was?
Oh, okay. So the color is the winning and the cover is the second?
In essence, yes.
This is just lingo everyone knows?
No. No, it isn't, because sometimes you don't think about it when we ask. You're like, what's that? So highest bid and second highest bid.
Oh, okay, there you go. That's lingo. We all have lingo and different things, so that's funny. You should print that on a hat or something, color and cover. That's just kind of like almost like a gentleman's agreement of how the industry works, like, because they don't have to tell you that, right?
They don't have to, but most of them do. It's a good faith business on both sides, and the majority of the lenders are very cooperative.
I'm sure they are, because they're here.
Yeah.
And if they're not, we can track them down. So what do you do with that information? After you have that information, how do you use that to make decisions going forward?
It's how we track the market pricing. We watch what prices do. So if prices start to fluctuate, if they go up, they go down, that's how we track it. So
okay. So like, in other words, because you're all blind bidding, but you should all be coming in within like 1% or so, ideally.
Usually we do. Typically again, whatever brokers that lender sends it out to, we're all usually pretty close to each other in pricing.
Mm-hmm.
If you happen to see a level that's just out of whack, let's just say the market value of the loan is 110 and you see somebody bid a 112, that a new terminology, we call that one sticking out.
Mm.
And that typically means a broker made a mistake. And I know it's
Really?
hard to believe, but we do make mistakes every now and then.
And then and then they probably bought it and they basically overpaid for it.
And you've overpaid for it. So typically, and most of the lenders that have been in their program a long time understand that, and they'll pick up the phone and call us and say, hey, you might want to, something looks wrong on, bid number 3.
Interesting. So that's another sort of gentleman's agreement.
Yes.
Because I was thinking like, oh, score 12%. Yeah, nice. But they would actually be like, look, something's wrong here.
Yeah.
So this whole industry is founded on, this is crazy. This is like a small industry. It's built on personal relationships and doing the right thing. This is not like a really commercialized thing, it sounds like.
Right. It's not a commodity type market that just, trades at warp speed, on a Bloomberg screen all day long. It's relationship driven.
How did StoneX even find out about this little industry? Let's pivot to that. So tell me what you're doing now.
So I just recently started with a firm called StoneX Financial, and they received their SBA pooling license in February. So and it's the mortgage group that I'm working with. So they're pretty big traders in the mortgage space, and it just felt like it was a good fit for them. They've got a lot of end clients that buy SBA product, and so they did some research and made the decision to get involved and just become a pool assembler and create their own pools instead of having to go out and purchase on their clients' behalf.
Mm-hmm.
So we're getting up and running.
Yeah. So step 1, finding someone that knows what the heck they're doing.
Well, so far I have them convinced that I do, but so let's not tell them.
Well, guys, if you're watching this, good job. You made the right choice. That's awesome. So you're just getting set up right now.
So we're getting our program built. We hope to be up and running here pretty quickly. Just a few more things that need to get put into place, but they're very committed to the business. They certainly did their research. The group that I'm working with has, done a very good job of educating themselves on the product. It just timing happened to work out when I chose to walk away from my other group. After again, I'd said being shut down for the second time, it was time to do something different, and they reached out to me, and it seems to be working so far. So.
Do you think your clients are going to follow you over there?
I think a lot of them will. I've already got a pretty good.
You're getting some phone calls.
I'm getting phone calls and emails, and
Awesome.
like I said, it's the relationships that have been built over the years, and the support has been overwhelming.
That's awesome. I'm happy for you, and because I don't know this world as well as I probably should. Is there anything I didn't ask you, or any final parting words?
I think you covered it a lot. Just whole industry has just given me so many opportunities. So not just secondary market, but getting to participate, like I said, with Nagel and different boards. And I was asked recently, well, it's actually been a couple years now since we first started, but we have an all women-led and run CDC being opened in Houston, and I'm one of their founding board members. So I'll get to learn a little bit more on the 504 space and get involved there a little bit as well. So.
Oh, interesting. Are you gonna buy some 504 firsts maybe?
Maybe I don't want to get
we
I
had
don't want to get ahead of anything.
We had
so,
Ken Rosenthal on here a couple weeks ago, so
yeah, so that's getting a little ahead, but it's called Texas State Advisors and Texas State Business Advisors, and it's a great group of people, and I was honored to be on the board, and
that's awesome.
Excited to get busy with that too. But number one priority is StoneX and SBA and getting us up and running.
And CDCs they're nonprofits, right?
Yes.
That's awesome. The lady who owns the company we rented this equipment from, what is it called, Madison? Well, yeah, let's plug them. Sparks Equipment here in Nashville. She just closed on a 504 loan like a couple weeks ago.
Good, that's
But
great.
I guess your CDC just in Houston or just in Texas or?
It'll be based in Houston, in Texas loans right now.
Okay, yeah, so it doesn't come out this far into Tennessee, and also I will just say we should acknowledge that you brought a guest here to your podcast taping. Hi, Susie, one of our super fans of the podcast.
Thank you, Susie.
This is this is a live taping, I guess. Now, I think that wraps us up. Karen, thank you so much for doing this. It was a pleasure.
I appreciate it. Thanks again for asking me. We'll have to take another flight somewhere and have another conversation.
Absolutely.
All right, that's it for this week. Don't forget to subscribe to the podcast so you never miss an episode of The Art of SBA Lending. And if you have any feedback or suggestions, email me at ray@artofsba.com. Until next time, ta-ta.